On Friday night, the caretaker government raised petrol prices by 26 rupees and 2 paise per litre and high-speed diesel (HSD) by 17 rupees and 34 paise per litre, reaching 331 rupees and 38 paise per litre for petrol and 329 rupees and 18 paise per litre for HSD. This decision was attributed to the rising global petroleum prices. No changes were made to kerosene or light diesel oil rates. This increase follows a significant hike on 1st September when fuel prices jumped by up to 18 rupees per litre due to existing tax rates, import parity prices, currency fluctuations, and a slight increase in international oil prices. The sharp rise in petrol and diesel prices has significantly contributed to inflation at the retail level. This has raised concerns that the State Bank of Pakistan may need to reconsider its decision to maintain the key interest rate unchanged. Analysts predict that this month's inflation could range between 30 to 31%, surpassing the SBP's target of reducing it to 20 to 22%. Additionally, business leaders have expressed worries about the substantial increase in petroleum product prices. They fear this will worsen existing inflation, increase the burden on the public, and create challenges for industries due to the elevated cost of doing business. They criticize the caretaker government for not keeping petroleum prices stable despite the rupee's recent strength against the dollar and the declining cost of imported crude, despite rising global crude oil prices. The cash-strapped Pakistan International Airlines has secured a 17 billion rupees bank loan, which has allowed them to pay employee salaries and ensure smooth flight operations. The airline is also releasing funds to meet national and international obligations, including payments to fuel companies and purchasing spare parts for immediate aircraft repairs. Additionally, salaries for employees and officers for the current month have been disbursed, and payments for leased aircraft have begun. In this week's global markets, we saw mixed performances. Asian markets showed diversity, with the Nikkei 225 up 1.10% and the Hang Seng rising 0.75%, while the Shanghai Composite declined by 0.28%. In Europe, markets closed higher, notably in France, where the CAC 40 gained 0.96%. Germany's DAX rose by 0.56%, and London's FTSE 100 increased by 0.50%. Turning to the local stock market, it experienced mixed trends throughout the week. However, Friday brought a positive turn as the State Bank of Pakistan decided to maintain its policy rate at 22%, contrary to expectations of a significant hike. As a result, the benchmark stock index closed at 45,754 points, a 0.6% decline from the previous week. Notably, trading volume surged by 61% to 222.5 million shares, and the traded value jumped by nearly 300%, reaching 11 billion rupees on a day-to-day basis. In South America, the Bovespa in Brazil gained 0.49%. Meanwhile, in North America, the S&P 500 in the United States led the IPC in Mexico lower, with declines of 1.2% and 0.78%, respectively. The Pakistani rupee continued its upward trend, rising by 0.37% against the US dollar in the interbank market on Friday. This ongoing appreciation has led to expectations that the dollar might stabilize. The crackdown on forex smuggling is expected to keep the dollar rate lower in the open market, and exporters are selling their dollar holdings, increasing liquidity. The US dollar lost 1 rupee and 11 paise, closing at 296 rupees and 85 paise. Meanwhile, the current account deficit has narrowed significantly, by almost 80% to $160 million in August, despite easing import restrictions. However, concerns remain about the sustainability of the exchange rate due to rising demand for dollars for imports and declining inflows. Exchange rate stability is crucial for economic stability. Daily gold rates from the All Pakistan Gem and Jewellers Association have been suspended for 4 days due to a crackdown on the gold mafia and speculators by law enforcement agencies. The last gold rates released were 1 tola at 215,000 rupees and 184,585 rupees for 10 grams on Tuesday, showing an increase from the previous day. However, despite a drop in world gold rates, the local rates remained controversial, sometimes higher than expected. The association's chairman, Haji Harun Rashid Chand, explained that authorities had been in contact and picked up 5 association members during negotiations. While traders were later released unconditionally, authorities initially considered suspending bullion trading for 3 months to lower rates and curb speculative trading.